Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Wednesday morning market webcast. Okay, so we talked about consolidation. We talked about how the ability to break out of this area opens up 29.40 to 29.50. They did 36.5 yesterday, so not quite up into that zone. And then they spent most of the day dealing with a lot of pushback from the bears. So, I mean, the bulls ramped it up. I think they got a little bit too far, out of their lane, so to speak. And they got pushed back down. The hourly, you can see here, whole week's worth of consolidation. You get the expansion. Now we're back into kind of a consolidation phase. You can see they ran it up and they ran it back down late morning, kind of chopped it around into the afternoon. The bulls defended it where they had to, and we're just kind of flatlined from yesterday's close. We get the FOMC decision today at 2 o'clock. That's certainly going to move things. I'll be interested to see how the market handles that. If the market handles it positively, then we're talking about the same 29.40, 29.50 area that we've been discussing in the last few days as a potential area where price is really going to get attracted to if we move to the upside. If the resolution is downward, okay? And remember, don't try to game the Fed, okay? We don't do that in the room. There's two things I never try to game: the jobs report and the Fed. And when I say game it, I mean don't come in at 158 and go, you know what, the reaction is going to be positive or the reaction is going to be negative. Because when I read Barron's last weekend, that's the kind of stuff where you got to stay away from those trades, because if those trades go well, you'll almost instantly bail on them because you just got away with something. If you're wrong, you tend to hold on to them, because the trade really isn't about a chart or about a price. It's about your thesis on, central banking. And you don't want to be wrong, you want to be right. Those are the trades that are intended to be day trades, that turn into swing trades, that turn into trades that can really wreck your account. Please don't game the Fed, okay? The better approach, the approach that we use is, look, we're going to get a decision. There's going to be a reaction range out of that. We're either going to do higher lows, higher highs, break out or break down from that range. And almost always, there's more than enough handles from that breakout or breakdown against a marker that is established, so you know where you're wrong, to take advantage of any volatility that's created. So that's better than just saying, you know what, I'm going to put my subscription to The Economist to use today. We are going down. Okay, good luck with that. So we'll see what happens at 2. If the resolution is downward, they're going to have to deal with daily pivot at 17. They didn't do a very good job of dealing with 19 yesterday. 17 is underneath. They'd have to convert that 19 to 17 area. If they could do that, then they could take it back to where they had it on Tuesday. I mean, you need a real negative reaction, but hey, it's the Fed, so anything can happen. I'm not expecting a lot of excitement between now and 2 o'clock. Be very honest with you. At some point, we're going to kind of get stuck on a shelf, and we're going to wait for the Fed to make a decision. Immediately off the open, I think the key area is 29.25 to 29.26. You've got the hourly mid-band there. You've got volume-weighted average price. We have our proprietary moving average there. So long above, short below 26. Once we get opened, we'll probably at least tell you the general direction of where you want to be this morning. All right. Everybody have a great day. We'll have some more stuff out on social. Come check out the room. Another big day yesterday. What we did yesterday was we played around right off the open for a couple minutes with shorts in that 29.12ish area, but we ended up flipping long against 11.5 against our proprietary moving average, and then a few minutes after that, up we went. So that pretty much locked in the day for us, as well as the week. All right, trade them well. Talk to you soon. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.